here's the only metric that really matters if you're an insurance agent that is spending money on advertising. All right, listen up. Calculating CPA. What this stands for is cost per acquisition. So many people in the insurance game or financial services game are not calculating. They're spending money on advertising and they're not even calculating what are you getting in return. And the way that I like to think of this is what is the cost per acquisition of a new client? And here's how you calculate that. Even if you're not the one making the sales and you have a sales team, it's a little more complex, but it's really actually pretty simple. So we have total CPA equals the marketing CPA, which is how much you spent on average in marketing money to acquire a single client, right? So we'll break that down in a second, plus how much you pay an agent or a salesperson to close that deal. So the total cost per acquisition right here equals how much you spend on marketing per new client on average, and how much you spend in a closing agent, in a sales agent or a salesperson, how much you spend that equals a total. Let's just break this down really quick. So marketing CPA is going to equal, let's say you have, you're spending money on Facebook ads. So let's just say you spent $1,000 on Facebook ads, all right? And let's say you got 10 new clients, okay? So you have 10 new clients, excuse the handwriting, and that is going to be $1,000 total. Take the total you spent on your marketing campaign divided by the number of new clients that you received, right? So let's say you got 10 clients out of that. That means your marketing CPA is equal, in this case, to $100. That's what it costs you on average to get a new client. So let's just come up here and let's put marketing CPA equals $100 per client, okay? So you have $100 per client over there, and then let's say you're paying somebody, a closing agent, let's say you're paying them $100 a sale. Let's just make the math easy. That means you, for every new client, you have $100 that you're spending in marketing for Facebook ads or YouTube ads or direct mail or however you're getting your marketing sent out. You're spending $100 to get the marketing out there, to get the clients, and you're paying $100 in staff costs to close the deal, which means your total CPA over here is $200. $100 for the marketing, $100 for the agent. So imagine for a second if you're receiving $500 per new sale. So let's just say your revenue, I'll put it over here. Let's say your revenue is $500 per new sale. When you make a sale, that's what comes into your bank account. How many times would you as a business owner trade $200, right? You give $200 and somebody returns you $500. How many times would you do that?
How many times? How many times? How many times? How many times?
As many times as the bank will let me, right? That's a good trade. So if it costs you $200 to acquire new clients and you can get, instead of 1 or 2 referrals a month, if you can spend it on marketing and pull a lever in your business to bring in more sales automatically, right? If you could do it for $200, right? It's not a free referral, it's $200, it costs some money, I get it. But if you could do that 50 times in a month, would that be worth $10,000 for you? Well, I don't know. You're gonna spend 50 times 200 equals 10 grand that month on your credit card. So it costs you 10 grand, but then you're going to get 50 times 500, which is 25 grand in return. Would you spend 10,000 to get 25,000? The answer is yes.
The word is yes, Carl.
Right? But too many people get caught up on, oh, it costs too much money to advertise. Well, not if these are your metrics. Now, if your metrics are way out of whack and you're spending $700 in your marketing CPA and $100 here, well, then all of a sudden we have a problem, right? Because you're spending $700 to get $500. That doesn't make any sense. But most people don't have to spend that, right? So when you start dialing in your numbers, you can start to scale. I had a client years ago, it was about 2.5, 3 years ago, and they come to me and they said, John, and he had like 6 or 7 agents running marketing systems. And he said, Josh, something's just not right. I'm just spending so much money. I don't see that this is even working. He was running some marketing that I taught him how to do. And I said, let's break it down here. All right, let's dive in, right?
Right now, the Philippine diving team, they're having a rough go at it.
And so we broke down the numbers, and he was getting a $80, I repeat, marketing cost per acquisition for new clients that were paying him $500 when they enrolled. Turns out he wasn't tracking his numbers. He had no idea what was working and what wasn't working because he didn't look at it this way. He just saw the credit card bill going up, and he didn't track the revenue that it was attributed to that campaign. If he was looking at the numbers like this, and we walked through the exercise on a Zoom call together, and I said, so what's going on here? Would you say that this is a good or a bad campaign? And he goes, no, it looks like it's awesome. I'm paying $80. What should I do from here? And I said, spend more money, right? That's the only thing left is spend more money. Go, if you could do it on repeat 100 times a month or 1,000 times a month, that is a winning recipe. If you don't know your numbers, you have zero clue how you're actually going to scale this thing. You just are hoping that it works out. You get frustrated when you think it doesn't. He was almost going to quit. The best campaign probably of his entire life, he almost gave up on because he didn't understand that he was winning. You need to understand when you're winning and when you're losing, and knowing your numbers, that's the way to understand how to scale your business. So hopefully this is helpful for you. We break this down even more in the Thrive Seminar 2.0. Whether you've been before or whether you have never been at all, it's brand new curriculum updated for what's really working in real time in my business. That's helped us scale to a $50 million evaluated company this year, and I actually had a majority exit. We're going to talk more about that, the structure, the systems, all this stuff. Thrive 2.0. It's going to be in Phoenix, February 3rd and 4th. I cannot wait to see you there. There's a link somewhere around this video above or below. Click on the link, get yourself registered, and I will see you in Phoenix, and I'll help you figure out your numbers.